Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, March 1st, 2021. What I'll do is an update on all the major asset classes, or at least the asset classes I've been following. For example, that stocks are one asset class, so we'll look at the stock market, gold's another, crude oil, or well, those fall in the commodities. Bitcoin, I now put really, you have to put that in its own asset class. So we'll hit on that real quick, the cryptos and treasury bonds. Most certainly want to do an update there. So, and that pretty much covers it. Those are the main, primary asset classes. All right, stock market. Really, nothing new to report. I had to leave town on Friday. Was gone, unavailable all weekend too. But I didn't miss anything on Friday. We have the primary trend line right there on QQQ off the March lows, which recently we had a sell signal there, hit my first target at 314 bounce. And, as I said back then, that day we gapped down. This was Tuesday's gap down. That's a big reaction low. And as I said back that day and every day since, that's what we need to take out in order to trigger the next, drop down to open the door for a move down to that next potential target there around 297. And you can see we've had several successful defenses. On Thursday we hit it, we tested those lows, and again while I was out on Friday, tested those lows, and so far held them. And it's really that simple. Support is support until unless broken. So we still don't have a follow-up sell signal. We had the initial sell signal, and it's a pretty big one, that breakdown of the trend line. But we've been bouncing around since then. We'll zoom in real tight between that low from Tuesday of last week and the top of the gap, which we back tested or backfilled, I should say. It did it first on that day. We gapped down, then ran up, backfilled it. Tested it again from above, tested it again from above, 3 consecutive days, and we're coming up on it again. So it's very, very simple stuff to me. There's no guarantees, nothing's 100%, but here we are, another rally back to the top of the recent trading range or close to it. If you really zoom in, we had a little bit of a momentum fueled overshoot here on last Wednesday and again on Thursday. If you can make it, I don't know if you can make it out in the video, there's a wick on the top of this candle. The wick is a skinny part. That means intraday we went that high. So really it's a little bit above the line that I initially had, which is the bottom of last Tuesday's gap. So that's pretty much resistance. If we happen to take it out, that should be near-term bullish and probably spark a rally up there to the top of the gap from that we gapped down on Monday. So from Friday the 19th where we closed to Monday's open, we gapped down, and it's not just gap support. That's one thing traders flock to. And again, there's an example there. We back tested it the very first day. We gapped down. We rallied back up, stopped there on a near perfect back test of the gap. 1, 2, 3, and now 4. So traders really watch those gaps. And again, this one isn't just gap resistance. There's 1, 2, 3, 4, almost 5 there, 6 candles from testing it from above, and then you count the ones from below, 7, 8, nearly 9, 10, 11. A lot of reactions on there. And that line is at around 330, I think it's 330.50, give or take. It's a 300-point index, so you have to give it a little room. So we'll call it about 330 to 331. And that's it. I really can't get it. It doesn't need to be any more complicated than that. We're trading in a range, and upside break of the range should, unless it's just a little whipsaw, but a solid break or daily close above there, should open the door for a backfill of that gap. That's resistance 1, and then resistance 2 would be a back test of the trend line from below. Likewise, this level that we've been failing at here recently, which comes in, again, if you count those pops above it, about 324, give or take. That's resistance. And if we fail there, then that should take us down, as it has before, to the bottom of the range. And if we get down to that bottom of the range again, I highly suspect it'll crack. Again, I wasn't around Friday. We hit it. We bounced there. So that's 1, 2, 3 tags to the bottom of the range so far. And again, I feel pretty good, pretty strong, I should say. If we get down there, again, we'll probably then go on to break it, because we've already tested it. From that initial reaction low two different days since. and that level is roughly, you can just put a line on the candle. The low there was about 311. There it is, 311 to the button right there. Okay, that's it. Really, let's not make it any more complicated than that. If you're trading futures, I'll take a quick look at that. NQ futures. Here's what we've got on the NASDAQ 100 futures. This is a 60-minute chart. There's your little bearish rising wedge. There was your sell signal right there. Breakdown. So far from that breakdown, we had a drop of, so I can grab it, a measuring tool. That's about an 8% drop. Okay, so we hit almost perfectly. This is when I was out. That actually was late Friday morning. If I put that down, that's February 26th on the crosshairs at the bottom. That was Friday, Friday early in the morning, after midnight. But we hit a almost perfect perfect test of that 12,676 target that I've had there for quite a while. You can see it here. I've got a couple charts above. This one was from way back when, shortly after the breakout. There's that 12,676, and this one was posted here. This was February 23rd. That's where it had us going to near term. So what I did since then, after posting this chart here on the 23rd, here I'll zoom in a little for you so you can see it and move it over there. 12,676. I made it a support zone. So going back to the one that we have right now, the live chart. That's it, and we hit that 1276 almost to the button right there and bounced, and we did it with positive divergence. So it's only divergence right now, or we only had divergence on the RSI. We didn't have divergence on the PPO, almost, but we didn't have it. And again, here's what you're looking at. Since the breakdown, this is a downtrend, unmistakable downtrend, a series of lower lows and lower highs so far. We're also seeing volatility expand lately, and that's usually something you see early on in a correction, but it's not guaranteed. Here was a breakdown, a comparable break on the 60-minute chart. We immediately had volatility, but we pushed up, made a marginal new high, and in doing so just extended the divergence that was in place. So keep it very simple on NQ. It's just like QQQ. QQQ, I showed you we're at support. And same thing, the recent lows, and same thing here on NQ. So your magic number is 12,676.24. It needs to be taken out to open the door for more downside in the market. Okay, and then analysis for the NASDAQ 100, or really the market as a whole, in my opinion, is incomplete without analysis on the big market leading fangs. There's Apple. No change. Same story I've been talking about since we had a sell signal here, took out both the uptrend lines. That gave us a sell signal on Apple. Hit my 125.75 target, which is support, broke below it, and every single day since, including the day we broke below. We came this far down, rallied to back test and close right above it, below it. Look at that. 1, 2, look at the bodies on these candles, or the shadows. 3, almost 4 there, and currently back testing. So say what you want about Apple, say what you want about technical analysis, but you cannot argue that's not a significant resistance level with all these reactions since it was taken out. So it's simple. We come solidly back above it and print a solid close. Anything more than just a whipsaw, well, that's bullish, because we regained it. We undercut that target, or that support level, but then regained it. However, should we fail here, and we say resistance is resistance until unless broken. So you can make a case for an objective short. Market's been holding up strong since the breakdown. The safe bet is to wait for an undercut of Tuesday's lows in the market, like I talked about, both the NASDAQ 100 and S&P 500. The short now would be aggressive. Like I said, the market is hanging in there really since the breakdown. But it is objective with that being said, and also it's subjective if you're an Apple bull and you want to go long on a breakout above that level, but you might want to watch QQQ and make sure it can take out the comparable resistance I just showed you. So there we are. Same story as the last few days. Apple below support, back testing it from below, and how we close the day could change the near-term outlook, at least for this stock, and of course the market too, depending on what we do. Run through the rest of the fangs. Microsoft, so far, a perfect back test of the trading range that I've had boxed in, the shaded area. There was our breakout right there. following earnings, and we came back in, made a perfect back test at the top of that level right there. 1, 2, 3 days. Successful back test and moving up. So, like I said, Microsoft, I'm sorry, is one of the most stronger charts in the FANG stocks. And as I said many times, if you're bullish on Microsoft and/or the market, that's a very objective level to step in, go long, with a stop somewhat below, because you can control it for the leg, to the next leg up to new highs and beyond. Should we come back in and fail it, which will most likely happen if the market breaks those lows that I just talked about, the recent lows, and if Apple gets rejected here off resistance, then Microsoft will probably fail to break out, come back in the trading range, and then you have this uptrend line to watch here as the first support level. But as of now, there are absolutely zero sell signals or check marks for Microsoft. In fact, if anything, it's just a plus for the bullish case on this particular market leading stock, because we made a nice breakout, perfect back test, and so far we're moving above it. So I like to do these check marks for the bull or bearish case. Bulls get one here so far, and as long as they can keep it above 228. And then the rest of the FANGs, those are the big ones I'm watching. There's Amazon still holding that 30, 86-ish, 87-ish support. Alphabet, one of the stronger ones as well. Still, I have added this minor uptrend line recently, so that's one to watch. Should we get another leg higher, we're going to this will form, or has the potential to form, a bearish rising wedge pattern. What I'd do is move this divergence line over here, and we could do this. A scenario would be something along these lines. Again, if we get a little leg up, let's just say, for example, we go to back test that primary uptrend line on QQQ from below. That would probably look something like this on Alphabet. Another leg up within this bearish rising wedge pattern to put in a divergent high. That's one thing lacking on this and some of these stocks. I really like to see, for the case for a big correction, I'd like to see negative divergence on all the market leaders, or as many as possible, and that's something we don't have, at least not at this time. But on this scenario, one more thrust up would bring that PPO up, as long as we didn't take out the previous high. Same on the RSI. Turn back down at the top of the wedge and then go on to break down. This would be your sell signal on a break below the wedge. So that would be this scenario right here is a near-term bullish, intermediate-term bearish scenario. And again, just something to watch. These charts are dynamic. They change every day. They're constantly developing. So these are things I'm watching for. But we don't have, the main point here is a lot of the market leaders are still holding up somewhat, and some better than others. Tesla, covered that one ad nauseum, already broke down, had a sell signal there when we broke the minor trend line. Then we broke the 802 level, 800 level. That was the second sell signal. Hit my first target at 661.78 right there, and there it is. Another case of technical analysis. That candle, that bottom of the body right there. Just about every day we've held that. So this is an important level on Tesla. Bullish if we can start moving away from that level, especially take out the previous highs. However, just like the stock market, there's big resistance. That 802 level to me was a big level. Lots of reactions there. That's why that came as a sell signal once we took it out, and that's why you had a pretty sharp move down, well into the double digits. So there's the story. I see the market has a lot of work to do. It's been resilient, but if it is to continue to, well, not continue, we've been moving sideways, but if we start to climb here, you need to watch those overhead levels, because a rejection off those, should we get there, would be bearish, especially if we undercut the recent lows, while break above would be nothing but bullish. And there's a little minor trend line. Let me add that to Tesla. That could trigger a rally up to back test that 802 level right there. So something along these lines. Okay, covered stocks, and I didn't go into every index. Like I said, if the NASDAQ 100 rolls over, that's where I'm hyper focused now. We take out those levels. Mark my words, the S&P 500, the Russell 2000 small caps, the mid caps, they'll all follow if those market leaders roll over, break those support levels I just highlighted, the next support levels below. And next up, TYX did an update on bonds last week, and we were right here testing that 2416 level on TYX. That's the 30-year Treasury bond yield. and mentioned that as area where it's likely to fail. And again, this is a weekly chart, and we did reverse off that level. That's a weekly candle, so the reversal was big. In fact, you go back to the daily chart, you can see right there we put in this doji gap down below. That's a bearish, certainly a bearish potential reversal pattern. We broke trend right there. So I remain near-term bullish on Treasury bonds. Remember, yields, this is a yield. Yields go down, bonds go up. So we can look at TLT. TLT, likewise, I did the video on Thursday, and then that's where we reversed intraday. You can see the big volume right there on TLT. I think there's a shaded, the volume bar is that white shaded area. There's the bottom. So it was a big intraday reversal. Right when the video was being done, we were at that low or right around there. And from there, we rallied. And again, I was out of the office on Friday, but that was from that low up to the top of that Friday's candle. That was almost a 5% gain. You can see just eyeballing it. This was one of the biggest jumps in Treasury bonds in many, many months. You can go back and can't find a candle that big for a long time. So either way, it shows that again, we're extremely overbought. And look at the volume too on that reversal. So Treasury's a little bit down today, so I think it's still objective now to add to or take a TLT position if you are bullish on bonds, or ZB, that's the 10-year U.S. Treasury bond future, which looks like this. This is a ZB on a hourly chart, 60-minute candles. Yeah, there's a little trend line right here, a little downtrend line that was taken out recently. There's a reversal, and we're back testing it. So that makes the case for an objective entry. First target up here about 161.314. And then there'll be some stops along the way if we continue to rally, but potential swing targets all the way up there to about 166, 125 on Z. Now, whether or not this plays out, bonds are clearly in a downtrend right now. Treasury bonds, we had just blip, one strong day up, could just be oversold, bear market rally, short covering rally. But one thing to note is this scenario doesn't have to, but will most likely play out with the more downside in the stock market scenario. Meaning, if we take out the recent lows that I just started with highlighting in the beginning of the video on the market leading stocks and the Nasdaq 100. So it's not completely contingent on that, but somewhat of an overlapping trade if you are long Treasury bonds holding out for this much upside and also short the equity markets. And that rolls, segues into the next update on crude oil. Same thing. I've been saying this for a while. Most likely, I have a short setup here on crude. We had a uptrend line there that was broken, back tested. We came to the apex of the wedge. We had negative divergence. And this is, by the way, I know I'm going fast, CL, our crude future, 60-minute chart, hourly bars. And if you don't trade futures, I'm sorry, if you do, but you don't like the size of the contract, QM is the micro or mini contract. Trades off the same price as it just has a smaller leverage factor. So you can go with QM instead of CL. And what we need, we had, okay, so the breakdown of backtest, then we had a sell signal here. Last week I highlighted that as the next sell signal with a target to be this uptrend line, which we hit. So we hit my uptrend line, bounced, and we're cracking below it. We cracked below it today. I'm going to zoom in real tight. So I can make right now an objective case to either initiate or add to a short on CL because we hit my first target, bounced the trend line. Then we took it out this morning and we're back testing right now. So it's objective to short with a stop somewhat above in case they regain the trend line, probably above that reaction high right here, that recent reaction high on CL. And target would be down here, about 58.90 is the my next target on CL. And there's a lot of crude tracking ETN. Some are inverse. You can pick your favorite one. That's USO. I don't really have this chart. Oh, there it is, somewhat marked up. And there's a potential swing target for USO. Again, this is the most liquid, I believe the most liquid ETN that tracks crude oil. It does a pretty good job of it. And that would be a good 12% drop if we get there. And again, not 100% contingent on what the stock market does, but most likely. So if you are currently short or plan to short crude, it will to get down here, you'll most likely have to see that next leg down in the market that I'm still looking for. Nat gas, I don't have a strong opinion. I did back here. I pointed out this divergent high. Said sell signal coming to break of that trend line with a target being this uptrend line, and that was hit. So we hit my target, and I added a level here, 2835. Where we're at now, it looks like decent support. We had a major reaction high there, reaction low there, and we also have, I wanted to point out, some positive divergence right there on the indicator. So if you want to take a shot at nat gas, it's objective here with a stop somewhat below 2835, and target really don't have one right now. Just maybe trail it up or stay out of it. My convictions aren't high on it, but I did want to pass it along and do an update. And Bitcoin, sort of its own asset class in itself. There was that bearish rising wedge highlighted recently, and the breakdown also highlighted, and back test also highlighted, fell down, hit the 40. This is support right here, about 45,477. You can see all these reactions from below, and we put in a positive divergence there on both indicators, on the RSI and PPO, and so far held that level. Now, here's the thing: small divergent low following a big breakdown. Coin toss odds for me if we go on to break it, but I can say if we do break it, if we break 45,477 with conviction, that should open the door to my next target and potentially all the way down here, 29,852. Otherwise, maybe this was it for the correction that was indicated in advance by the negative divergences and the break of the bearish rising wedge, just like we had, a comparable pattern here. We had a breakdown, and that's not all we got. We corrected till we hit this point right here, this low, and then we put in a divergent low. We retested that low with the indicators making higher highs, so it was the same thing. Breakdown from a bearish rising wedge pattern, correction, ending with a divergent low, and then a breakout of a bullish falling wedge pattern here. I'll show you everything I'm seeing. That's it right there. There's your bullish falling wedge pattern and positive divergence. So right now I don't have a clean downtrend line I just have that divergent low. So those are the levels to watch on Bitcoin. And if you don't trade futures, GBTC is your closest thing, other than buying the cryptos on one of those crypto exchanges. I don't do that. Everything here on this site, I focus on things you can buy through a stockbroker. And this is GBTC. That is a Bitcoin trust, similar to an ETF, tracks the price of Bitcoin. This is what a 60-minute chart looks like. Nice clean uptrend line on the 60-minute with negative divergence right there. So sort of wedging up, but above trend, at least the way I drew this trend line here on GBTC. Futures trade around the clock. This guy here trades, 9:30 to 4 p.m. That's what you're seeing on these trades. There's what it looks like on the daily chart. Divergent high, as mentioned recently, we took out that daily trend line, came down, hit my first target zone. Look at that, parked that candlestick, that doji stick right on the top of my first target zone, hanging in there now. So that's it. If we go down, we have support all the way down to about 39.25. If that breaks, I would open the door to T2. And I have to tell you, I'm leaning that way. Why? Well, this big on this daily chart here, big negative divergence right there. I know everybody's foaming at the mouth bullish right now on Bitcoin. Again, I go by the charts, and right now the chart's saying there's been a heck of a move, but we had a breakdown, i.e. a sell signal there recently, hit the first target, little reaction so far, but that was a big divergent high, and it would indicate more than that. Just when I say little, relatively little pullback. What do I mean by that? Well, that drop from the divergent high in just a matter of a week or so was a 30% drop, but that's not a big drop for Bitcoin. It tends to move up and down, and you measure the trends in high double digits to triple digit gains in this thing. So again, the 30% is just a blip, if you will. But again, there's been these blips before, and it continued to run higher. But usually, once we had the divergent highs, like here, here, and there's bigger ones back there with bigger corrections, the corrections lasted longer than just a week or so. So that's why my expectation is more downside here. And should that happen, Riot, I mentioned Riot breaking here below this trend line the other day, dropping from the breakdown point about, I don't know, depends how you measure it, 35% or so. and it really hasn't hit support, but it's going to track Bitcoin. And bottom line, if Bitcoin hits my second target, moves lower, breaks bottom of the first target zone, then Riot should hit my first target, which is 27, and that gives us from where we're at right now about another 46% downside in Riot. Last but not least, we'll look at gold. Gold hit my buy zone back here on the day that buy zone was laid out. Objective long entry, and we reversed there. Came back, hit my buy zone again, the top of the buy zone again, which runs from, I don't know, you can see the box, this shaded area. This is the top, and this is the bottom of the buy zone right there. Bounced off it after successfully defending the top of that, the moderate support up top. Then we dropped into it, but we're still inside the buy zone. Again, this buy zone is for long-term investors in gold that, like I did. I sold, been bullish and long gold and the mining stocks throughout most of the uptrend there. But when we hit up here, the case was made for a pretty, a near-term top in gold and the mining stocks, and as well as silver. And we did. We've been correcting since. But this is where I'm buying back in for long-term positions, scaling back in gradually. We don't have any hard buy signals right now. I can't make a strong case other than gold is in a bull market by my long-term charts and every other trend indicator there, and it has been a healthy correction. With corrections we've seen in previous bull markets mirror this. And again, that's a really nice support down here at the bottom of that buy zone to about 158. So no hard sell or no hard buy signals on gold. Here's what it looks like GLD on the 60-minute chart. We have some positive divergence forming. We've had divergence, I pointed it out, but it's just grown longer. There's no clear downtrend line, and there's 157.13 as the next support. We're really starting to stretch the divergences. If we get down to that 157-ish level, it might have negated the divergences on the 60-minute chart, but they're not a must for a reversal. One thing that I do like to see, however, in a bull market, let me turn off all the lines. In a bull market, oversold readings they're rare and they're usually very fleeting. What I mean by that, one and done. See that? We hit the 30 level there on the RSI down below. Here, I'll make it a little bigger so you can see it in the video. This is gold. Gold bottomed back in 2016, in December of 2016, and it was off to a slow start until it broke that about 130 level was a big level for me. That's when it started to really rip. It was in a bull market. It did bottom there. It was moving up, but we had that again. We had resistance. It was capping against about 130, and you can see once it broke that level. We hit it once on a pullback there. We hit it twice there, and that was that last time I said, time to start scaling back into gold. Big pop there, and we're there again now. So again, in a bull market, you want to buy these pullbacks to the 30 level. And now maybe the bull market's over and the new bear market starts in gold. If that's the case, then what you might see or will often see in a bear market is oversold tends to become more oversold, meaning move much below the 30 level, or stay oversold for an extended period of time. You can see that on the weekly chart here as well when you look at the RSI. Let's go back to the daily chart. All right, so that's gold. And again, I can't make a hard case to step in and buy, but I can make a case to continue to scale in for longer term investors. And this is futures GC. Pointed out pretty good support here, but we took that out, 170, and that's not a great sign. We hit it, we bounced, we had divergence there, so we had everything that gold needed to start a nice rally. But what happened is we failed at this downtrend line. Now we did take out support, and that's probably the most important thing. So that's why I'm not crazy about gold. That's why I can't issue a hard buy on it, or recommend going to full position. But we do still have positive divergence here on the 60-minute chart. So although we took out that 170 support, there's bullish divergence on the 60-minute time frame, which could be the catalyst for a move up. What we need to do now, keep it very simple. If you're waiting for a hard buy signal, we need to take out that trend line. That should do the trick. We have enough reactions there, at least 3 distinct reactions, and a break of the above that trend line should take us up to any or all of these targets there on gold. And then finally, last but not least, that likely depends on what the dollar and the euro is doing. So the euro had been in an uptrend here. We put in a divergent high. We started a new downtrend line. We hit my first target zone, my second target there. Put in a divergent low right here. And so whereas here I was looking for correction in the euro, here I started looking for a rally. Case was made with bullish divergence. We went up, put in this little divergent high, had a correction, but we remain, since this divergent low right here, we remain in an uptrend, a near-term uptrend. First leg up, corrective wave. Second leg up, that put in a divergent high right here, and since then a correction. Now where we go from here will most likely determine what gold does. Gold will typically move in line with the euro, because the euro is going to go inversely to the dollar. So we're at support right there, that 120.30 level. That's that previous reaction low. So the bullish case to gold would have the euro reverse here, start rallying, and that will most likely bring gold and silver up. Otherwise, we break that. All you have down below anytime soon is this support down here. It's a pretty good level, about 119.52. See, there's a previous reaction low just to the left of my chart here, right there, that reaction low, and that 119.52 level. That would give us, again, if we don't hold this 120.30 support, that's probably what's going to happen to the euro. And then flip it around, you look at the dollar index, it's just an inverse mirror of the euro for the most part. And you can see the dollar here, put in that divergent low. A falling dollar is bullish for gold, a rising dollar is bearish for gold. So the strong leg up, falling, again, it was in the charts, positive divergence had been building. We had divergent low right here, as pointed out. We got a rally right into that 91 resistance level target. It was hit, pulled back down, slightly undercut this support. And see, this is what I think was bullish on the dollar. I had a support zone here that ran down to about 89,939 right there. And we took it out, and that's a bear trap. That's a whipsaw false sell signal, and we did it with positive divergence. And then once the dollar recovered that level, boom, that's a short squeeze. That's what a bear trap's all about. Shorts pile in when support's broken, and then if it's regained, they start to cover. And now with that quick squeeze up, now we're at, just like the euro, we're at a very critical juncture. Remember, this is almost like looking at the euro upside down. Whereas the euro is at support, the dollar is at resistance, that previous reaction high around 91 there and change, and there were reactions there. So that's it. We're getting pretty stretched, meaning overbought on the near term. Again, hard to say, but probably pull back here. But should we break out, whether we pull back first or not, that's going to be bullish for the dollar. All right, let's wrap it up here. Get the video out to you guys. So those are some of the things I'm watching. And as far as individual stocks go, I'll follow up if anything stands out. Really like to see which way this market's going to go from here. And like I said, it's anybody's game right now. We've been bouncing between support and resistance on NASDAQ 100 for last several days, last several sessions, that is. And we're just going to have to wait patiently and see which way it breaks. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.